Good morning, everyone. Today is the 21st of July, and I'm going to do a market update today for you. I chose to do a market update today because a couple of things have happened, and as I'll go through soon. But we're in an area where a lot of people are questioning whether this is a bear trap or we can continue upwards. And the way we can find evidence to what's going to happen is by going through the BTC chart, and as we know, the macro charts like the SPX and so on. So I want to go through some of these today and tell you my own perspective. First of all, BTC breaks out of the rising parallel channel that we had drawn a couple of days ago, breaks out, and he's back testing it right now as we speak. Now, if it breaks it, it's not going to be that bad because you have the 200 week, which is demonstrated by the light blue line. You have the 200 week moving average, and that acts as a very strong support. And we actually wanted to back test that maybe with like hidden bullish divergence on the 1 hour. Again, if you don't know what that means, don't worry. I have videos about it explaining, but you can find it there. So ideally, if we close this candle here, or maybe the daily candle here, then we have respected the rising parallel channel, and our target should be the height of the parallel channel from the breakout or from the back test, which will take us to about 27K. In confluence to that, 27 to 28K is where the BTC has a futures gap, so that would be a good target to aim for. If we cut below this and cut the 200 week, we could definitely return to the support, the strong support of 19 to 20K. But that is yet to be seen. What I want to look at today is the SPX, because the SPX, which is something that the BTC is highly correlated to, has broken out of this falling wedge. It did so with pretty strong, well, not that, but weekly bullish divergence. As you can see, this RSI low is a bit lower than this one, whilst these lows are smaller. Well, this low is lower than that one. So we break this descending wedge, not rising wedge, my bad. And this is a bullish reversal type of pattern, and it's pretty large, beginning from January and now breaking out now. So if you do a textbook target, it should probably take us to around 4.3K, which would be the 200-day moving average, which would act as strong resistance. Now, again, even if this falls, it still has a 200 week below it as strong support. Basically, if we put the pieces together, there's a lot of edge or expected value for my poker players out there in buying spot BTC from 19 to like 20K if for a long-term trade, then there is shorting around these areas, okay? Something else to take into notice is if you look at the BTC to SPX chart, it's also broken out of the 200 week, which was a big problem because backtesting it a lot could have made the same problem that we had at a 200 day where we just started to get destroyed. However, I pointed out last stream to someone who asked this exact question that BTC has had such a drawdown already with almost very, very, very little retraces that this is probably going to break it to the upside, and it did. So this is very good, and I wouldn't be surprised at a bit of a retrace to backtest the 200 day, but I'm still personally targeting the 200 week. I'm personally targeting the 200 day, and that's the same for BTC. Actually, that's here, and which is at about 35K. That is still my personal target. Nonetheless, you can have your own. So total 2, we're looking at right now is the altcoin market cap, as we know. Still looking pretty good, nothing out of the ordinary. Maybe it's also due for a retrace. It can go back to support. It doesn't really matter. Overall, it's very nice. Total 3, same story. That's the same thing excluding Ethereum. Yeah, there is one problem though, something I should mention. Ethereum to BTC is under the 200 day, got rejected by it pretty strongly. If we go to the weekly, we can see that it's closing, or is at least creating a very ugly candle below the 200 day, and it's going to close in 4 days, and the last thing you want is a repeat of what happened in, I'll go log, is what happened in September 2016, where you closed below the 200-day and then you had a massive drawdown. Now, I would actually not be too surprised in this, because at the same time that this drawdown occurred, BTC was actually pumping very hard. It's like, yeah, of course, because it's a ratio to BTC, but no, not exactly, because Ethereum to BTC can mean Ethereum is just dumping harder than BTC, but no, this was when BTC was just pumping much harder than Ethereum. And this will not surprise me, because if we either locally bottomed or fully bottomed for this bear market, it has to be Bitcoin which leads the charge. So that is not surprising at all, and it's not the worst thing to happen. You should just be, my only recommendation is watch this closely if you are someone who is long Ethereum but not Bitcoin. Now, I think what we can do, I haven't done this for a very long time, is we can start to look at the what I call the worst coins, the worst altcoins, the ones that got absolutely destroyed, and we can start to look for bottoms there. Now, they are finally starting to change momentum, but I don't know, there's not much to say until like big high lows and higher highs are made. So for now, let's just leave it as it is, and we'll look back into it in the future. Anyways, guys, thank you for watching. I enjoyed you guys being here. We're growing the team massively, even though I thought everyone was out of the game. I'm going to be streaming more. I'm going to be helping more on Twitter if you DM me. And just stay in the market, guys. You will make it. See you next time. Bye-bye.